A lot of talk about Greece, the EU summit, and the fact that the European Union will be standing by Greece. Nothing really new on that front, but it'll be interesting to see what kind of details we see in terms of loan structures for Greece next week.
No, exactly. I think the European authorities would have wanted to at least try to be seen to be at least pretending to do something for Greece. I suspect that the markets, though, are looking for something very, very tangible at this stage, because the irony about something like Greek debt or Italian debt, etc., because you don't have your own currency, the debt is almost like a corporate debt. The country actually has to earn the resources to pay that debt. They can't just print it away like the UK or US are doing.
And in terms of how it's going to affect South Africa, clearly there's such a big focus on what's happening in that country. Is it about emerging markets? Is it about risk aversion right now rather than what's actually happening in the Eurozone?
No, I think what's happening since the first crisis period that we had in 2008, you are getting a bit of differentiation taking place. Not fully yet, but certainly countries that have reached problem levels or are heading to problem levels are going to be placed on the spotlight. And so clearly in South Africa, one of the things that is going to be put on the spotlight is the budget deficit. Is it something that's going to be closing over time? If it isn't, the budget deficit along with the current account deficit says big warning flags. However, South Africa is, if we down the same path and on the race, we are way behind because we had a period of 10 years where, or even longer, where we had austerity, where the government did bring down the debt to GDP ratio right down to 22%. We do not have problems at this stage.
Chris,
but
also
it
just
could come sooner than we'd like.
State of the Nation address yesterday evening at 7 o'clock. Of course, we had interesting comments about industrial policy, no real detail. We also heard of 1 billion rand incentive plans for banks in terms of the property sector and lending money out there. Yes. And apart from that, 845 billion rand earmarked for infrastructure spend. Were you overall happy with the comments regarding the economy?
As I say, I don't think there was too much contentious stuff in there. Obviously, what I do worry about, a lot of promises, that are still in the pipeline, and a tax base that's under pressure. And we've got to be very careful that we don't make the mistake that Greece, for instance, has made, or Portugal, or other countries that are in trouble, that we over-promise beyond the capacity of the tax base to actually carry these promises. That's probably, one of the problems that we hit, is that when countries see that they are in a policy cul-de-sac, they don't have electorates that will actually support them to actually take policy U-turns. There seems to be a tendency in the more recent years that we want something, the government must do something for us, and it doesn't matter whether it's affordable for the country or not.
Looking at the business side of things, economic side of things, we know that the rand is relatively strong, and in fact very strong against the dollar. Yes. And this is hampering exports. But some economists that I've spoken to say it's actually about industrial policy. It's not about the strong rand. We should change industrial policy. Yes. So, President Jacob Zuma did mention industrial policy. What kind of changes would you like to see on that front?
Well, the first thing, you're quite right. The rand will not resolve our problems. You actually have to resolve the problems. And should the rand be a problem, at the end of that period, then say, okay, maybe look at it. But to look at that first, you're down a path of capital destruction, because the rand is supposed to be a store of value. So industrial policy, yes, something that can support our industries, but that actually drives genuine competitiveness, right, with the global economy. If we cannot compete with China and India, we will shut shop. So we have to sort out things like productivity. We also have to look at industrial policy or sectoral policies in a way that helps to lower barriers to entry and level the playing field so that small businesses can enter the space and create jobs. That is where we're going to create jobs. In addition to that, we have to actually say the 400 or 800 billion capital expenditure program, etc. How are we going to pay for it, right? And the only way we're going to pay for it is to actually get our savings rate to the same level as where our capital expenditure rate is. So we can't have fixed investment expenditure at the target rate of 25% of GDP, right, with a savings rate of 13%. We have to get that matched.
I was also happy to hear that independent power producers were, of course, mentioned as well in Eskom. But what's interesting to note that here in South Africa, independent power producers have been quite interested in entering this space, but unfortunately they aren't able to be, they haven't been awarded contracts. So the question is it Eskom to blame, or are we saying, you know, should we be passing the buck to the Ministry of Energy? What exactly is going on here? Do you think he was, you know, he gave a bit of detail in terms of how we're going to see this space change?
No, I think clearly we've reached a cul-de-sac when it comes to energy policy, and you've actually got, you cannot have the rigid sort of thinking that's been going there. You actually have to have a now more pragmatic and more logical solution to the electricity problem, and one of them is to have competition to Eskom. Right, it's not Eskom's fault or anything like that. We've got a set of rogue regulations. Nobody needs permission to go ahead and produce, but the regulatory structure is that if you produce electricity, you're forced to sell it to Eskom. In other words, at whatever price. You can't just make your own arrangements. So effectively, you've got to sell your product to your competitor. Does that make sense? No, it doesn't. Well, that's one of the things that needs to be sorted out. You actually have to sort out the regulatory structure so that barriers to entry are lowered and that you can have proper commercial arrangements that make sense.
Chris, we mentioned unemployment, industrial policy, the rand, and of course Eskom, and these issues very pertinent to the corporate sector right now. In terms of the earnings that you see coming through, do you think they're sustainable? Some positive, some a little bit negative, but you know, these are all the problems that overhang the sector.
We always see problems at the bottom of an economic cycle. Funny enough, it helps to expose viability issues, and that's clear people's mind and put their businesses back into a more viable position, and that helps the recovery phase. We are at the cusp of a decent recovery. It's going to take some time. I think I believe that the strongest part of the recovery will only be after the World Cup, in other words the second half of this year, as things sort of build up slowly. The World Cup obviously restraining growth as we go on holiday during that period and enjoy ourselves and all the rest of it. It'll be a great World Cup, but when we get back to work and the spending multiplier that and boost of the World Cup starts to kick in after the World Cup, and the credit growth starts to get into an upward cycle, we will get some good growth.